Okay, hello everyone. This is Martin. This is the recap video. Again, we're recapping what happened on the week of July the 4th to the 8th. We're going to take a look at the trading opportunities, how we could have gotten into some trades, and what kind of pips we could have made. So let's take a look at that. And we're starting with the Euro USD chart. This is the Euro USD daily, and price did pull back, which is what I was looking for in this week. Price pulled back, bounced off of the resistance being this gray rectangle, being the moving averages, especially the stronger moving average, which is the 21, much stronger than the 8 here. Also bounced off the long-term upwards trend line. You can see that actually almost right to the pip here with this candle, with the bounced off with this candle. And finally, this candle, take a look really closely, is a bearish engulfing candle, complete engulfs the previous white candle. So you're good to go when you see a bearish engulfing candle, which is the strongest candlestick pattern. Um, that you could certainly hope for, then you would get in at the open of the next candle being right there. It went back a wee bit on the next day after that. By the way, this black bearish engulfing candle was the Tuesday, so right away at the end of Tuesday, 5 p.m., you would have gotten in right here. This is Wednesday's trading, but by Thursday and Friday, you would have made at least 30 pips, okay? And the other thing I said is take an aggressive sell trade below the 110.90. Now let's take a look. Below 110.90, which is right about there. That happened on again on the Tuesday with this big black bearish candle, and that now was good for a little bit more. The aggressive sell trade was good for 43 pips. How do you take aggressive sell trade? Well, first of all, when price is here and when price is going up, what you're doing is you're anticipating where price is going to go. In this case, we're anticipating a bounce off the resistance here. There's a lot of confluence there with the resistance of the resistance zone, the moving averages, and the trend line. Okay. And we're going to place what's called a pending sell stop order. So even though price is up here, we're anticipating price to come down and take us out below the low of this wick and below this 200 SMA. Do you see that? The red line, the red dashed line is at 200. So placing a sell stop order just below there, you would have gotten that into that trade there and you would have made those pips. So not a huge amount of pips for the Euro USD pair, but you would have made 43 pips on the aggressive sell trade. Now we get to the British Pound USD. Now, last week, I did say that price is going to keep trending lower, and I did say to take a breakout below the 130 AD. Now let's take a look. Get the crosshair tool, breakout below 130 AT, which is right about there, right? No, I'm sorry, 130. 130.80. Where are you? Right about there, okay? 130.80. Taking a breakout trade, a sell trade right there. Wowee, that would have been good for 189 pips. Okay, and that's how you do it, folks. So that would have been good. There was no real pullback. Just price was going to go down. But take a look again real quickly, just a heads up. Price seems to be retracing back off the support. I mean, price has come down so low. It's been the lowest in about 30 years, right? So you can't, price just can't keep going down uh, low forever. So here's the retracement, the start of a retracement. Heads up, could be great for a counter trend trade, but I'm getting ahead of myself. We're supposed to be looking at what happened, not what's going to happen. That's the other video. So, anyways, Australian USD is the next one. Let's take a look here. There's the LEOD chart. Here is the regular price chart. And with this, I said. Um, I basically recommended taking a buy trade right on the Sunday Monday Okay, with my recommendation for taking a trade right away with the Sunday Monday open, which was this candle. You see this huge bullish candle? That would have been a good idea because, and the reason I said that because look at the close on the previous Friday. After a take a look at last week. These are all this is the daily chart, so these are all daily candles. Price here closed with strength above the blue 50 SMA. Price also closed above the 100 SMA. The next day we had kind of a doji indecision, but then on the Friday, the close of the previous week, the bull certainly showed its strength, showed who's in control. It was a bullish move all the way up with no retracement at all on that candle. So that's telling me that price is most likely going to continue higher, and getting in right there would have given you about 49 pips up to about here, right? If you're an end of day trader, which means that you get in on a daily candle and you close the candle the next day, you would have made 49 pips. Now, the next day after that, there was a retracement and then a huge up candle again. And this is again, you got to look at the candles every single day. Um, and just, here's the other opportunity. We've got to go down to the H4 chart. You can see that right here. This red line depicts the close of the previous Friday. So price went up higher. You made some money there, but now there's a retracement. And uh, to get in some really good trade opportunities, always switch your charts from the daily to the H4. Go back and forth, and here you can see a clear, beautiful retracement. I mean, look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9 black candles, right? So this is the classic, it's setting up for the classic pullback, break the trend line, continuation trade, right? So this is what you do. You draw a trend line joining up the wicks on the high side right there. There's the wicks, okay? This candle actually, let me just do something for a second. Okay, so that's about there. See this candle right here? This is an engulfing bullish candle, and guys, you got to watch this. Anytime price comes down to a support or resistance area, now in this case, support is defined by the 100 moving average as well as the 50 SMA. You see how it all joins here together? Okay, so that's support. And you can see previous candle here is a wick. This is a pin bar, so shows you that buyers are coming in, bringing price. After price came all the way down, buyers brought price at least halfway back up again. And with this next candle, the engulfing candle, this is the clearly defined candle that tells you that the buyers are now completely in control. It completely engulfs the previous candle, getting in right there at the on this candle would have given you some amazing pips, and on the 4-hour chart would have given you anywhere from 63 to 91 pips. Okay, so that's how you do it. Now we go to the New Zealand. I'm going to take this off just for a second because that's the 4-hour chart. I'm going to show you the same thing with the New Zealand USD, but now we're going to go to the daily. Okay, so here we go. With the New Zealand, I mentioned to buy right away. And again, for the same reason, look at the close on the previous Friday, which is always a good indicator. Always take a look at the close on the previous Friday. In this case, again, one solid white bullish candle getting in right there. And take a look at that, guys. I mean, that was good for, what was that good for? About 63 pips, right? Same thing as the Australian dollar price went down the next day. But again, we have that same bounce up situation. Here, I had drawn in previously. You can see this upper trend line. So get in the habits of drawing longer established trend lines here. It joins the previous low here, it joins the major swing low right here. So we have a swing low, join the two areas. That gives you that line, okay? Price went up. We kind of expect price to come back down to here, and look at that. With this pin bar, bounces right back off of this line and bounces basically off the support area. Um, and if you're not sure what to do, Then you just wait for bullish evidence to the upside. This is the daily chart. So here is your evidence right there with this white bullish candle and getting in at the open on the next one, which is the this would have closed on Thursday. Okay, so Thursday at 5 p.m. or any time in the evening, you could have gotten in right there. Okay, and that it was good for um, 83 pips or so, something like that. So just excellent opportunity. And again, if we switch down to the H4 chart, we want to do that to catch those pullbacks, to draw in the trend lines, because that's what you need to do. Then look for a breakout of the counter trend line to the upside, and let's take a look. So see this line right here? Here is the close of the previous Friday. Price has gone up and up and up and up and up. And then what do we anticipate? We anticipate a pullback. Okay, there it is. There's the pullback. Let's draw in our counter trend line. Let's do it correctly. Joining the wicks here. You can see the wick high, wick, right? Okay, we're joining that, waiting for a candle to break above the trend line, which is this small pin bar, bullish pin bar right here, getting in right there, and that would have been good for some pretty good pips. 151 pips right there. Now, taking a look here, even though we had to bounce up and price closes above the 50, like with these candles here, you still don't want to get in. Don't want to take a trade. A, because price is below these moving averages and price is below the trend line. So it's the trend line which is part of the major clue that you're looking for. And remember, I keep talking about pullback. Wait for a pullback. Wait for a break of a trend line. In this case, it's a counter trend line, right? Counter meaning down trend line. Okay, here's the uptrend line, which shows you major support. This is the downtrend line, which signifies resistance, 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 resistance. But finally, this candle breaks through resistance, right? And bingo bango, look at that. It just skyrockets northward. So that's what we're talking about, looking for evidence with the break of a trend line. Again, take a look at your MACD here, how MACD right there. Okay, let's take the crosshair right there, you see? Even here. If the MACD is below, but the histobars are getting smaller and smaller and rising toward the zero, it just means that the the uptrend is gaining momentum, okay, or strength, and or in the opposite, the downtrend here is losing momentum, and when downtrend loses momentum, it shifts to an uptrend, and that's what you see with these rising histobars right here. Okay, so that is the New Zealand USD. Now we're going to jump to the US CAD. And with this pair, here's the daily chart. Um, now, I did mention that we were in a major triangle consolidation and we were looking primarily for price. I did say to break above the 130.20, which is right about there, right? To break above the 130.20. Now, price never did that on any of these days, and it did on Friday. However, there's no trade based on what I did say because that happened on Friday. You can only get in at the end of that trading day, and that was at 5 p.m. on Friday. So there is no further candle. Now you have to wait until the Sunday open, right? Still a good time to get in Sunday open, but you may want to wait for a pullback, as I mentioned in my other video, into the pullback into this area, this red rectangle. However, we did have another trading opportunity, which I did really not anticipate myself. But after a pullback, look at this again here. This is a daily chart. Previous Friday close, bearish candle there. Then all of a sudden we had one huge bullish candle here, right? Okay, so you could have gotten in right there, and that would have been good for some pips. Let's take a look. Price did go down a wee bit, but basically good for, depending on how long you held it, for at least 60, 70, 80 pips. Okay, so that is so basically no trade based on what I had mentioned, but I did want to show you that other aspect to trading, which is waiting for a pullback and then getting in if you see a bullish engulfing candle, which is the most powerful price action. And again, take a look here again, the same chart. Price pull back, and what do we have here? Here is a bullish engulfing candle, completely engulfs the previous candle, the black candle here, and also closes above the moving averages. Okay, so there's good indication, good clues that price is going to continue higher. Let's go to the US Swiss franc. Same thing here. I said look for more downward movement. We actually did with the Sunday Monday open. It did go down, but we have the same thing. We have this one huge white bullish candle. It bounced off the support. This was on the Tuesday. So here's the support. Look at that, guys. I'm sure I had drawn that in. I would have, well, I can't save my charts from one week to the other, but anyways, it bounced off the support. It broke and closed above not only the 50. You can see the 50 with the blue SMA, okay, and you see this dash blue line. That's the 100 SMA. So closed above there. I would have gotten in right there, and that would have been good for some pretty good pips, at least 66 pips. Not huge movers, but there you go. And I also said that, um, yeah, price did not close. I said you can look for sell trade below 96.90. It never did, so there's no sell opportunity there because I did mention look for close of price below 0.9690. Okay, so finally we get to the U.S. Japanese pair, and let me just switch to the chart. There we go. Okay, and I have to go to the daily. Okay, now you can see this pair is just progressively moved lower and lower and lower and lower. And I did mention that this pair was trending lower. Look at the close here on the previous Fridays. This again, this red line right here depicts the end of the previous Friday. What is this candle here? Anybody? This is a bearish engulfing candle, right? Again, where? Off of resistance. Remember, resistance is not only just the gray rectangles that I draw in, but resistance is also the moving averages. And that's why I love the moving averages. Here is the 8. It's not the strongest moving average. In fact, it's weak, but it is very strong in the downtrend. Just make a note of that in a downtrend, and you can see the angle of the slope of this 8 of the 21. That's when these moving averages are very strong. So price did go up in the previous week, bounced down again with the black bearish engulfing candle. Good to go right there, and that probably was the big winner of last week. Holding on to the trade right to the end of the week was good for about 193 pips, or maybe over 200 pips, depending exactly where you got out. And one other thing I did say, a conservative. Um, oh, by the way, that 211 pips was an aggressive sell trade that I recommend. Now, I also recommended a conservative sell below 101.50. Let's take a look at that. So I did mention that in the video. Sell below 101.50, which is right about there, okay? 101, yeah, right about there, 101.50. And that, again, that would have been either if you would have watched this candle here on the Tuesday, you would have gotten in right there on the sometime after 5 p.m. on Tuesday. Could have been any time between 5 and let's say 9 p.m., 5 to 10 p.m. Could have gotten in right there, and that also was good for about 105 pips. So, and I did mention that in my video. So either way, you would have made some big pips, and in total. For last week's trading for the week of July the 4th to the 8th, minimum around 600 plus pips. Pretty darn good trading week. Let's take a look to see if we can repeat that or do even better for this coming week, and look forward to hearing from you, your comments. If you have any comments, just email me. I'd love to get in touch with you, help you out a bit if I can. Okay, so take care. Happy trading, everyone, and we'll talk to you again soon. Bye for now.